didn't talk to you about
some
gold correlations, right? Which would be interesting because gold is up 20 and U.S. dollar is down slightly.
Yeah, we are so clear of 2,700, which I thought, again, that's been an inflection point in gold. We've tried it, given back $100, tried it, given back $30, $40. We're well clear of the inflection point. Yeah. So, we look at markets that are trading out of range now. 27, 23 is a pretty sizable. And the fact it's not there for, when I look at again, this doesn't make me become a momentum trader, but when I look at something hold a new range for more than a day, I got to put a little credence against that, maybe there is a new range. And where's challenged right now? The shorts. They're being challenged right now as to, whether the next leg up is 2,800 plus or not. But a little surprised to see that play through. Certainly giving Aussie a little bit of a boost. Glenn ran a great series of correlations. And again, we want to start thinking about causality and currency prices. And, one of the things you and I have talked about, what we want to do with this show is make product adoption easier. And FX is really easy to adopt. And what I mean by that is it's a binary outcome. If you buy it, it goes up, you make money. If it goes down, you lose money. There's leverage, so capital efficiency, and that means you can risk more than you put up. But the idea that Euro USD, I want people to start thinking about everything else you're trading, whether that be gold or Tesla or Amazon. It's Amazon USD. It's Tesla USD. Just don't worry about the fact there's two quotes within the pairs. It's just another tradable opportunity, and it's one that's scalable. So you can start small and you can scale into it. So because often I hear the world of Forex is, I don't know if I'm ready to learn that. Everybody's ready to learn this. If it provides a different set of opportunities, it's easy to construct and it's easy to engage with. We shouldn't be adverse to adding this when we look at next level diversification. And I think that understanding, if it's the fact that somebody trades Apple because they feel vested in, I love this iPhone, this iPad's really cool, and what they have on the roadmap is interesting. That gets you interested in trading product. That's great. Does that make you a better Apple stock trader? I think that's the hard part. But if you're excited about the product and you feel you've got a connection to it, that's great. We want to give you the same kind of connection to these products so you can start to employ them a little bit and start to be able to find some opportunity in them. And it's really straightforward to do. So looking at the correlations, hanging my hat in that I know correlation doesn't mean nothing's perfectly correlated, but strong positive correlations, 40, 50, 60% are interesting. It means that if gold's up, Aussie's up, not every day, but there's a play to be had there. It is another way to represent that kind of exposure. So that's kind of our goal here. And we're seeing
what was the correlation between gold and Aussie? I honestly am at the edge of my seat, wondering what it's been recently.
You know what? This one's interesting because it is consistently pretty strong. It was in the 40s, and Glenn ran 6-month and 3-year correlations, which I thought were great because, you can't have a divergence of correlations. In other words, you can't see a divergence. The correlation breaks down. So you've got to accept the fact that you don't get a tradable opportunity to trade one against the other based on divergence, because when divergence happens, correlations break down. You accept that, and you look at the longer term. The one that was really light, and I think you probably would guess this one, Canada crude.
Yeah, I
really
definitely.
Old 3-year correlation, much more robust than the last 6 months. But Aussie Canada, still Aussie to gold, Kiwi to gold.
Really,
Aussie to copper.
Those were still strong.
They were within 3 years. Were within 3 months.
Really?
Yeah,
I'm actually surprised to see that because we have the USD CAD chart up here, and you can see all this US dollar strength over the course of really the last few weeks, even with the crude run up and the crude sell off, and so hard to really make a case for correlation, even just anecdotally in that. And you said the number also confirmed that the crude Canada correlation isn't really there right now. This piece I am a little surprised by because what's really funny, Pete, is and correct me if I'm wrong, US dollar and gold tend to have a negative correlation historically.
Right.
Now, it might differ between the pair. Maybe the Euro USD correlation to gold is more close to zero, but it's still probably positive, which means negative for US dollar to gold. But to your point, Australian dollar, US dollar correlation to gold is usually one of the more positive ones, which means negative for US dollar to gold. And so what's really funny to me, though, is that if you were to look at the last several months of gold price action, and sure, you and I are watching it every single day, and we're saying, oh man, it's having trouble breaking 2,400. It's having trouble breaking 2,500. It's having trouble here recently breaking, 2,700 now, to your point, that we're clear of. In the grand scheme of things, it's actually had pretty much no trouble shooting from 2,100 to 2,700. You and I remember going back to the pandemic, gold hit 2,100, which was kind of the all-time high to beat.
Right.
We
cleared the old high by about $100. Just enough to shake out everybody on the short side, and it turned around viciously.
Yeah, exactly. We broke through 2,100 around the pandemic, and then a couple of times since, but each time came back to at least 1,800, if not 1,600 at certain points in the last couple of years. In the last handful of months, gold has had relatively no problem going from 2,100, 2,200, 2,300, now 2,700 and up $20 today through those all-time highs. And what's funny is if the correlation between Aussie and gold was so strong, this Aussie chart should be ripping through a $1.20. And in the grand scheme of things, the US dollar has been able to remain relatively strong. It's not at its strongest point that we've seen in certain pairs around the pandemic, but then really when the Fed started to hike, the US dollar, broke through parity with the euro, got down to $1.05, $1.10 against the pound. Super strong US dollar market. Now we're not there, but Pete, we're nowhere near dollar lows given gold all-time highs, not just gold all-time highs, blowing out gold all-time highs.
Absolutely. And this is why we talk about correlations aren't perfect. They're again, fighting that and saying, well, this is one of these markets is wrong. Gold's wrong or Aussie's wrong because the correlation, it's not performing that. We take that context. Does this provide a tradable opportunity if you're a reversion trader? Absolutely. Aussie dramatically underperforming something that's correlated to it. It's funny, on the portion of the show I'm doing tomorrow, we're talking about a little bit of how you can substitute outperforming correlated products with underperforming ones and kind of create a synthetic bearish trade. So same situation here. The markets, neither of these markets are being priced wrong. What we're looking at from a statistical standpoint, there may be an interesting tradable opportunity here. From a statistical correlative standpoint, Aussie is cheap, gold's a little bit rich right now. Do with that what you want. It is context around, and that's why the correlation is not 100%. It's 42 and 38. So it's positive, which we're interested in. But you're right. And in this instance, this is a case where an overall dollar move is consuming any of the knock-on correlative aspects to any of these currencies. This is the dollar exhibiting strength as we move forward. That's sometimes the theme.
And correct me if I'm wrong, because so around the pandemic here in this spot, and this is a monthly chart of Aussie, we saw gold, climb up to that 2,100, Pete, and then it came off, like you said, viciously all the way down to, I think it might have broke through 1,600 and been even trading in the 1,500. Yeah, exactly. But I remember you and I looking at that historical data at the time and saying, okay, gold here at 2,100, this is right around the all-time highs. Going back to, I can't remember if it was 2008, 2009, or it was 2010, 2011 range. But again, it's just interesting that Aussie was able to trade in the 90 cent, even above parity level when gold had its previous run up. And now it can't break 70 cents. But what's so funny is, the correlation is still positive, and it does go to show correlation. Every every single statistic, technical analysis, everything. That's why you and I don't really depend on them to trade. We use them in certain ways, but don't depend on them, is because they're all imperfect. And correlation,
important nuanced difference. Yeah.
Correlation is a measure of same direction, not magnitude. And so it's just funny to me that, like, you'll see, I would imagine that in these months where Aussie was able to, bounce off of the lows, gold probably also had good months. And maybe gold pulled back a little bit when Aussie was mining through its lows here of, 63, 64 cents. It's just funny that it's able to hold that positive correlation, even though neither of these markets aren't in the same stratosphere in terms of historical price action, with Aussie still 300, 400 pips away from really lows for the last couple decades. And gold is, it might be, at this pace, gold could be $1,000 through its previous highs. I mean, Pete, we traded gold between 1,200 and 1,600 forever, and it might be knocking on the door of 3,000. It's just funny how these markets can hold these relationships, but really shift in terms of their dynamics. And maybe it presents an opportunity. I don't know. It depends on your portfolio, what you're trying to get out of stuff. If you were long gold, you want to take profits. Is Aussie interesting? I don't know. Or if there's a pairs trade. It depends on your portfolio and your strategy. But it's interesting to see such strong correlation, but a huge divergence in price.
Right. Yeah. Absolutely. And the ebb and flow of what drives product is, it doesn't make either of these mispriced. It presents an opportunity statistically that may be of interest to some people. So looking at, as you said, if I'm long gold, do I want to neutralize that gold exposure, substitute something that's underperforming, and use that as a gold proxy? It's another way to look at a tradable opportunity here, if you're looking at it. We got a little bit of flicker above 150 in dollar yen. I took that out last night. And then somebody from the BOJ came out and gave a little bit of chat as to that down spike you saw there at, what time was that?
It's
about 5 o'clock this morning. They're not ruling out future rate hikes. And again, this is the inflection point. 150, they're going to start to talk a little bit. It doesn't mean anything. And you saw the market, the algos reacted. They drove the price of dollar yen down a little bit, yen up a little bit. Didn't have much long last to it. So interesting. We're starting to see. It's interesting to go out the end of the week. Gold establishing a new range. Dollar yen starting to get comfortable above 150. Not, again, 150.03. How comfortable are we? This is not like sitting at 151 and we've been there for 3 days. So, but we are at the end of the week challenging that whole box of sub 150 levels that we ran through on August 4th and 5th in such a quick fashion with the supposed unwinding of the carry trade.
It is.
This will be an interesting one playing through not only today, but it'll be interesting to see the action Sunday night when the markets open early. Mm-hmm. And remember, FX opens early. It opens up at 4 o'clock. So if you're looking to trade and you're dying to get in, Spot FX gives you an hour before you get a future. So it's a interesting way to start taking in, at least take a look at where the markets are starting to open. So it'll be interesting to see if this strength in dollar yen continues through. And it feels it's yen weakness, but it's as much dollar strength. And I know that sounds confusing, but it's kind of a nuanced. What's driving this? Is this yen specific? Or is it dollar specific? I think it's more dollar specific right now.
I would tend to agree with you wholeheartedly, because it seems like every one of these jumps in U.S. dollar here is not only in the dollar yen pair, but we've seen it. I'll pull up pound, for example. We've seen pound get slammed on those same days. I think it is U.S. dollar strength, which makes the whole gold thing even more interesting, because if I were to say, of course, I have no clue what's going to happen in the future, but historically speaking, dollar versus gold, one has been right and the other has been wrong. And we're seeing, of course, gold blown out 2,700 is different than U.S. dollar getting back to 150 versus yen. But this is still a historic, high watermark for dollar here. And so they're closer to the same stratosphere, but gold's maybe a little bit stronger than dollar given recent historical price action. But yeah, Pete, this is super interesting to me because gold a lot of times is seen as getting demand because currencies are, weaker, interest rates are weaker. People want a harder asset because their cash is becoming worth less. And that story made sense when gold was running up through 2,400, 2,500, and this dollar started to get its butt kicked because it was like, oh, the Fed is going to cut rates all the way down to zero again. My dollars aren't going to be worth that much, so I should be buying gold, a harder asset here, something that has relatively less supply than the Fed turning on the cash printing machine once again. And you have a pretty strong dollar market. You had a strong retail sales number last week. You had a strong non-farm number again here in October. And you have the Fed saying, we probably aren't going to hike 50 basis points in November like you guys thought last month. And we might not, cut 50 basis points, and we might not even cut 25 basis points.
Right.
And so
wait till for December.
This is something to watch more than that Aussie gold correlation, which I definitely will be watching that, and maybe that's a good trade. But it does seem to me that, like, at some point, either dollar or gold have to give way, or is it just the U.S. will have the strongest economy, the strongest interest rates, and the demand from gold is every other country because they have to cut rates to zero. I don't know, but man, it's an interesting setup for what'll be a fun story the rest of this year, but especially into next year when the election and everything is over with.
Absolutely. And you mentioned the election. We'll check in Monday on the peso trade because peso tariffs, all the talk. Really interesting trade. The big thing now is every firm is talking about it. We've got our Harris election bucket of stocks, our Trump election bucket of stocks. And sure, the elections is that every part of the news cycle. Firms are presenting, and everybody's got an opinion on it. And here's your way to express an opinion with a tradable product. Peso's one way to look at that. This ebbs and flows with that. You'll see as the polls shift, this market. Again, not the only thing that drives it, but certainly a push and pull. We've had quite a run up to $20, 20 peso per dollar here.
Yeah, crazy.
So this will be an interesting one watch in the next 18 days. I think we have until the election. We'll see that play through a little bit here. So interesting pair to trade. We'll talk a little bit about the carry on this pair too and start breaking that down a little bit next week. It's the first time we'll do it. It's a good discussion, good pair to do because of the interest rate differentials.
Cool, man. Well, let's get out of here. Let's get you on your flight and get everybody on to the main Tasty Live crew in just a few minutes. Pete, I will talk to you soon. Everybody else have fun at the LA show or whatever you're doing this weekend, and we'll be back on Monday. Peace.